All right, what's up, everyone? Super excited for today's video. We're going to talk about small caps and small cap season, aka small cap summer. Now we've got a really amazing data set that we're going to go over. All right, we're going to talk about how this blast of buying in small caps could have the bulls smiling. We'll go over the actual numbers, suggesting what small cap returns could be over the next 6 to 12 months. And then we'll break down from a fundamental perspective, right? Looking at earnings growth, talking about growth rates, and then we'll talk about the big narrative right now, which is obviously going to be rate cuts and how rate cuts are being priced into small caps. All right, we'll go over why higher rates have been hurting small caps, and then we'll get into the charts. We'll break down IWM daily chart, the weekly time frame, and the important candlestick that we just printed on the weekly time frame, as well as the monthly candlestick patterns. We've also got the bullish scenario that we laid out. Now, all of these charts and all of these breakouts, these aren't hindsight charts. I posted these all for Discord members previously earlier, and we're seeing tons of breakouts inside of these, okay, off of these charts. And then we'll go over one last little data set here, just saying how they still are trailing their average move off the low and how there's potentially lots of upside to go. And then we'll talk about some mean reversion and flows as well, right? When you get into the flows, there's a lot of positive outlook for flows. So we'll get into that, and we'll talk about some different sectors and different types of, small caps as well. So it's going to be a really great video. Be sure to smash the like button, subscribe to the channel if you guys are new, and make sure you watch all the way to the end so you don't miss any of this important and very good data. All right, it's very good stuff. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter called Investment Intelligence, giving out free valuable finance and trading related content. I also try to sprinkle in some free trade ideas in there. Okay. So there is a website associated with it. So it's kind of like a blog format. You can go back and read some of the previous newsletters. Guys, take a look at the past few newsletters. Those trade ideas, okay, have all been printing, okay? Rocket was really good, right? The call options on the Rocket went up over 100%. Many of the trade ideas have been working out very well. So if you want those subscribed and sent directly to your inbox for completely free, make sure to sign up for the newsletter. Now, if you want access to all my analysis, all my different trade ideas, and much more things, join the Investment Intelligence private trading group. There's a link to join the Discord. In there, you'll get 20 plus swing trade ideas every week. You get custom scripts and indicators that I use to trade and make profits on. There's exclusive intel via the stock bot in there. You can get unusual option activity, dark pool data. You can get gamma levels, many, many more things, as well as exclusive chart layouts. Now, let's get into the meat of the video. Now, what we're talking about here is going to be this blast of buying in small caps and how it could have the bulls smiling. If you look at all of the signals highlighted here from Bespoke, okay, and you take a look at these are very good buying opportunities, right? Specifically, when you dial it down and you take a look at 1 month returns, okay, you're looking at about 4%, okay, about 4%. 10 out of 13 times. So essentially 76% of the time. The 3 month returns aren't as impressive, okay? But what's nice is when you really look at the 6 month and the 12-month returns, okay, you're looking at about 76% odds that we're going to be higher in the following 6 months and 84% odds, over the next 12 months. So if you're a betting man, okay, and again, I'm not telling you guys to bet on these, but if you're a betting man, those are good odds. Over 75% over the next 6 months and over 80% over the next 12 months. If I was gambling and I was making bets, these are good stats. These are good probabilities that I'd be willing to make a bet on, okay? Now, let's dive deeper into it, okay? And we're going to dive into the chart here. And we're going to take a look at the S&P 500 index returns. So we talked about the small cap returns. This is for the actual S&P 500 right here. The average return 6 months out from now is 19% higher. 19% higher. And what's really amazing is that if you take a look at the current percentage gains of the bull market that we're in right now, and you take a look at the average returns of the average bull market, we still have another 20% to go from the all-time highs. So a lot of this data is lining up very well. The median return on over the next 6 months is about 17%. And then over the next 12 months, it gets even better. You've got almost 27% on average. And then the median return is right around 29%. But the odds are really, really good, right? Over the next 6 months, the S&P 500 is up 100% of the time after this thrust that we've gotten in the small caps and in the IWM. So how am I using this data? Well, I'm looking for opportunities, right? Lately, the big narrative has been, oh, we're seeing the Mag 7 bleeding and we're seeing this rotation out of big tech into small caps. This data set shows you guys that historically 6 months out, we have 100% odds of being green on the S&P 500, and 12 months out from now, we look also really well with over 80% odds, actually 90% odds. So I'm looking and using this as a buying opportunity for the S&P 500 and maybe for some individual names as well, as we're seeing this rotation into small caps. Okay, so it's not just small caps that this is bullish for, right? It's not just a signal that, oh, well, sell everything and only buy small caps. That's not the case. Okay, now let's get into how this is fundamentally and potentially bullish for small caps, right? What's the narrative that Wall Street is telling you? What's the narrative that CNBC is going to be telling you, right? You guys can get out ahead of this or know what the current narratives are. Well, one of them is forward expected earnings growth. We have the S&P 500 or S&P small cap index, okay, the 600 S&P 600, which is the small caps. If you look at their earnings growth, all right, so this is 2024, all right, versus the S&P 500 in dark blue. So in light blue, we've got the small caps, and in dark blue, we've got the regular S&P 500. You can see here that in 2024, their earnings growth expectations were only around 4% for the small caps, while the S&P 500 had 12%, okay? And we've seen this massive divergence in the performance between the S&P 500 and small caps. Now, when you look at the expected growth for 2025 and 2026, small caps are expected to grow earnings at a higher rate than the S&P 500. So the stock market is forward looking, right? Maybe now the narrative is changing. Maybe now Wall Street is finally paying attention to these numbers. And maybe now this is one of the reasons why you're seeing this rotation out of the Mag 7 stocks, out of the top 10, 15, 20 names in the S&P 500 into small caps, right? Now this chart right here, it's a little tough to get these charts blown up into some good resolution. But the first one we'll talk about here is going to be Russell 2000 year-over-year growth rates. Now, if you're looking at 2024 Q2 earnings, 18%, 2024 Q3 earnings, 62%, and 2024 Q4 earnings 89%, right? And so the bar chart here does a really good job of visualizing this for you guys. And again, we're expected to see those nice earnings growth in the small caps. Now, what we also have here is that small caps typically outperform in the 6 to 12 months after the very first rate cut. Now, why is that important? Well, the market is pricing in Fed rate cuts once again. Now, this is something to be cautious of, okay? Because remember, we're already halfway through the year. In the very beginning of the year, the stock market was pricing in a lot of rate cuts. We have not gotten any, okay? So this is something that can change, and who knows? Maybe September we do get that first Fed rate cut. Maybe we get one at the end of the year, or maybe we don't even get one, okay? So the rate cut narrative is something that is a little bit more speculative than perhaps the earning growth expectations. So you do want to keep that in mind, but let's dive deeper into why rate cuts are actually good for small caps, right? And why rate cuts, typically benefit small caps and why they outperform in the following 6 to 12 months. Okay, now if you look right now, the market is pricing in 2 cuts in 2024, and there's a coin toss odds for a third cut in 2024. Again, the rate cut expectations were much higher in the very beginning of the year. So this is something that can change. But the reason why is because of debt, right? And when you take a look at floating debt versus fixed debt, okay? So the S&P 500 on the right here, you can see the fixed debt in dark blue is 90%. So 90% of their debt is fixed at a fixed rate. And oftentimes the case, what happened with a lot of these large cap and S&P 500 stocks is during the pandemic era when there was extremely low rates, what they did was they locked in long-term debt, medium-term debt, intermediate-term debt at a very low fixed rate. Now, small caps don't necessarily have I would say that benefit, right? Maybe because they're credit, there's different reasons, but the floating debt versus the fixed debt is a completely different picture. Okay. When you look at the floating debt versus fixed debt, the fixed debt is 51% compared to 90%. And so a lot of these small caps, they have much higher rates on any of their loans, on any of their debt. And that's negatively impacting them, okay? Because right now, since 2023 and 2024, the stock market has been reporting companies that are making profits and increasing guidance for profitability. In the Russell 2000 and the IWM specifically, there's no parameters for stocks to be in there, meaning the S&P 600, you actually have to be a profitable company to be in that small cap index or small cap ETF versus the IWM, there's no parameters for profitability. So one of the main reasons that we've been seeing small caps underperform as a sector and as a whole is because one, a lot of them are not profitable. Okay. So the market really doesn't care about unprofitable stocks right now. What they're looking for is profitable stocks that are projecting future profits and increased profitability. So that's one of the biggest reasons. And then number two is the balance sheet and is the debt, right? And a lot of these small caps, this just isn't a good environment for small cap companies, debt and debt financing and refinancing even. So let's get into some technicals. Okay, now on IWM on the daily time frame here, we had a very clear flag pattern forming. Okay, now this is a continuation pattern most of the time whenever you see these type of flags or whenever you see these type of pennants, right? So what is the trend heading into this? It's a bullish trend. It's an uptrend. And then you get this consolidation, right? And so we're absorbing the price action. So rather than correcting by price and seeing a correction all the way down here, what we're seeing is a correction through time where we really just go sideways for a movement. We broke out of this flag. What's significant about this is that this is one of the most extreme cases of a breakaway gap, right? So you can see here we have the space in between these two candles. This is what's known as a gap. We actually gapped up to the very top of the trend line here, okay, and continued to gap up higher, right? The next day we gapped up again. The next day we ended up gapping up again. We had 4 or 5 days of just gapping up in a row on the IWM. And we're starting to see some pullbacks, right? Now, does this pullback make sense? Well, the question or the answer there to that question is yes, right? If you just take a look at your Fibonacci's, you can see we have the 100% Fibonacci right here, and we came up to our 161.8% Fibonacci right there at 2250 roughly, right? You can see that's exactly where we closed. And that's where the last highest closing candlestick was exactly at our Fibonacci level. So from a technical perspective, does this sell-off make sense recently, right? After the huge rally? Yes, it does, right? And we've retraced, a good amount of that move. The big question now is, are we going to absorb this move and get a breakout to the upside? Or could we perhaps consolidate, maybe even come back down and retest the original breakout level, right? From a technical standpoint, one of the most basic things that you look for confirmation of a move or for perhaps a new entry on a breakout is your classic break, retest, continuation up higher. So, using this time frame, using this chart analysis, if we were to break out above 224.57, we are going to be targeting 245 to the upside. Okay, now let's go ahead and move on because we've got multiple time frame analysis here. And so when we look at the weekly time frame here, right, the weekly, we're targeting up here in the 230s. And that's, what I originally posted in the Discord for the members on IWM on this weekly chart is, hey, on the breakout here above 212, 213, we're going to be targeting the overhead supply zone above, starting at 230. Now, what's notable is the current candlestick that we have. Okay, we have an inverted hammer candlestick right here. All right, now it is technically a bullish candle, but what's notable about it, all right, is if you take a look, this is actually the least bullish of your candlesticks right here. Okay, that's pretty much the exact candle that we have currently at the moment. So now, when you look at things on a weekly time frame, the question is, what's going to happen next, right? Are we going to continue heading up higher? Well, being that this is a weekly time frame, it's very possible that the next week of price action is not going to be extremely bullish. Okay, now it doesn't mean that we have to collapse, but remember, this is the least bullish out of all of your candlesticks right here. Okay, so could we come back down and retest 212, 213? Yes, right? Could we consolidate? Could we move higher? Yeah, but I just don't want people to panic. The main thing is if you were to draw this as a range, right? And we were to just come in here and draw this as a range that small caps have been trapped inside of, does it make sense to see a breakout and then a retest and then a push higher, as we talked about on that daily time frame? Now, the weekly time frame analysis, for the breakout, retest, push higher, once you break the 230 upward supply zone here, you're going to be targeting the all-time highs on the IWM. Okay, multiple time frame analysis is important, and your time frame that you're looking at and your trading is also very important. But what's the bearish case scenario here? Well, the bearish case scenario, I would say, would be something like this. If we were to get a look above and fail, okay? So if we were essentially to, fall back within this range, right? So we talked about the big range that we've got here. If we were to come back in within this range, that's not going to be a good look for small caps. That means that this is going to be a false breakout. This could be a liquidity grab to trap bulls and poorly positioned bulls in all of these positions up here. And once you flush through support right around 212, 213, well, what happens there? Then longs start closing their positions, aka selling, right? And then you have your bears that are looking to short back below 213. So now you have twice the selling pressure, and that could result in bearish pressure back to the downside, potentially back down towards 193. So that's the main thing I think you want to pay attention to is on the weekly time frame. Can we close above 213, 212 over the coming weeks and maintain that level? If we do, then any type of pullbacks or consolidation is really just healthy for a potential continuation to the upside. Okay, now let's move on to the next chart here. All right, we've got a monthly time frame chart. Now on the monthly chart, things were looking really amazing for small caps in the IWM. We had the double bottom formation here, broke through our neckline of the double bottom, and we actually ended up forming a bull flag here, and we closed, which the month is not over yet. Okay, July is not over yet, so we'll have to see. But so far, this monthly candle is on a very strong start. And again, as long as we can stay above right around that 213 level, this is going to look very healthy. Okay, so we've got essentially two bullish patterns right here. And I love when you get a bullish pattern at the end of a different bullish pattern, right? Meaning we have the double bottom here. And so we want to get confirmation that IWM is going to go back up towards the target of double bottom again, right around that 230 weekly supply zone. Okay. And what are we looking for? Well, we're looking for signs that we're going to get that breakout. And what did we have, right? We ended up forming that monthly chart bull flag here. And again, we're starting the bull flag breakout right now. So 213 really comes up to a very big level on multiple time frames, we really want to hold above there. That's going to be a key psychological level, not so much on an intraday basis. Okay, we're looking at larger time frames. So if we close below that level for a day or two, it's not going to be the end of the world. But if we start closing below that level for multiple weeks, for a week or two, for 3 weeks, or for a month, then that's going to be potentially a big sign that maybe this was a false move. Maybe this was a false breakout. Okay, that's how you want to think about these things. Now, this right here is our bullish scenario. Again, all of these charts were posted pre-breakouts in the Discord, so make sure you sign up for that. But this is just very basic, okay? Not super technical, just keeping things simple, right? KISS, KISS, keep it simple, stupid, right? You have this move here, right? And then we have a large base, and we're looking for a replication of that move back to the upside, right? We got the very strong breakout, as you can see. Maybe now we're in this pullback period. So does it make sense we pull back maybe around to that 213 level, maybe around 210 or something? Or maybe this is the pullback right here and we continue higher. Either way, in this bullish scenario, again, you're looking for a retest of the all-time highs in small cap. So, when you look at the numbers, when you look at the data, and what do the numbers actually tell you? The numbers actually look great for small caps 6 to 12 months out from now. In the short term, right? We know that 212, 213 is that key level from a technical basis that we really need to maintain above on a weekly and monthly time frame basis. So you want to pay close attention to those, right? It doesn't mean that 6 to 12 months out we can't be higher if we end up closing below those, but it could potentially mean that, hey, maybe there's more potential downside before we get a continued move to the upside. Okay, so that's how I'm looking at the small caps. Now let's go into some more fundamental data. This one isn't too much fundamental, but these are some other graphs right here that I've got for you guys that I've gathered from the internet. There's still a very low bar set for small caps. We're still trailing the average move off the low. Now, what do we mean by that? Well, 175 days off the low, okay, meaning the bottom, typically small caps are up about 45%. Now, currently, we're only up about 29.8%. So let's round that up to 30, and let's round the average down to 45. This potentially leads to about 15% higher gains on average from the bottom for small caps historically. Okay, now 250 days off of the low, small caps are typically up about 60%. So if you take a look at where we're at now, about 30%, small caps potentially have another 30% higher to go, 250 days off the low. So we'll see how that data plays out. Again, that's kind of just an average and summing a lot of things together. Doesn't have to play out that way. We could overshoot that. We could undershoot that. But when I look at all of the data looks really great for small caps, and the small cap data also looks really great for the overall market as well. Now, here we have extreme underperformance plus apathetic flows. Okay, and so really what you want to look at here is the small cap ETF flows. Now, the red and blue lines here are just standard deviation. So we've got a 2 standard deviation on this chart. What you want to see is that we actually came into -2 standard deviation. Now, these are flows. These are flows flowing in to small caps. Now, some people may tell you that this is a bearish signal and say that, oh, this is a blow off top. People aren't even flowing into small caps. To me, what this screams of when you combine price action and the flow chart, okay, is that a lot of shorts got squeezed, okay, because small caps have been the area to short, right? It's not a secret that they've been massively underperforming. If you've been, let's say you were doing a pair trade and you were long QQQ and short IWM, okay, that's been a very successful trade. Here recently, okay, maybe it hasn't been. Maybe in the past week or two, it hasn't been the best trade. But when you look at the year to date or from the bear market lows, that's been a very successful trade. Okay. So maybe you have a lot of shorts getting liquidated, right? Or maybe you're someone who's just bearish on the market overall because of the Fed funds rate, and you think that the higher for longer policy is going to remain intact for longer and rates are going to stay higher. Well, then small caps have been a good short if you just look at the numbers, right? So with this massive move, and we're not seeing massive inflows coming into it, to me, that suggests that there was a lot of short squeeze, okay? And a lot of shorts, maybe closing their positions, maybe even getting liquidated or margin called and having to buy to close their short positions, again, just fueling the fire to the upside. Remember how markets work, okay? We're obviously not seeing a ton of buyers right here, okay? If you look at the flows, but the way the order book is set up, if there's not sellers, price is going to continue climbing higher. And we saw IWM gap up just over and over and over. It seemed like nonstop, right? 4 or 5 days in a row, IWM just kept gapping up. There were no sellers on the order book, right? It was just continuously being driven higher. And so I think that that was a big part of it. What's actually bullish about this chart is people follow price. So now that we've seen a huge explosion in price, you're going to see CNBC, you're going to see Wall Street, and you're going to see a lot of institutions and retail investors, I believe, start flowing into small caps. This is actually going to be fuel for the fire, and this is actually going to be a positive for small caps, in my opinion. Okay, so don't be so scared of the recent pullback that we've gotten. If you've missed that massive move in the small caps, or if you're someone that happened to buy the short-term top in small caps, it's not going to be the end of the world. I've gone over the technicals and the key areas that you want to pay attention to. And I've also given you guys the actual data historically, and the odds look amazing 6 to 12 months out from now. So maybe short term, yeah, things could get sloppy. Things could get ugly. We're seeing the QQQ. We're seeing the SPY pull back. Does it make sense that the IWM is now pulling back as well after just completely ignoring the pullbacks in the other markets? Yeah, it does. But the numbers look really good. And I think that this is great data that you guys should enjoy and have enjoyed. If you did, be sure to smash that like button and subscribe for more. Now, these are just some other areas of the market. If you're in the Discord, you know that I've actually broken down the charts for every single small cap sector individually so far, and also done so on a relative performance basis and relative performance level. And I've already shown you guys what sectors of the small caps are the strongest and have been the leaders. So, subscribe to the Discord. Okay, link is in the description. Really good stuff in there. I'm diving deeper into the small caps, and from the leading sectors that I broke down, what I'm actually going to do is dive into the leading stocks within the leading sectors within small caps. So it's going to get even more better. Now, when you look at these, we have huge multi-year bear markets, right? This is commonality that we're seeing across multiple areas in the market, right? You have the equal weight S&P 500 index peaked 672 trading days ago. You have the equal weight financials ETF, and then you have the equal weight healthcare ETF. All of these peaked over 600 days ago. What's important about this is from, just a common saying that they teach you and when you're learning about technicals and things like this is the higher the base, the higher that these can go into outer space, right? Now, they may seem funny, right? There's another saying, the higher the base, or the bigger the base, the bigger the rip in your face. While these have a little bit of a humorous tone to them, often case these are very true, right? When you look at a ratio chart of the SMH versus QQQ or SMH versus SPY, and you take a look at the dot-com bubble base, the huge, massive base that we had, multi-decade base, absolutely ripped in a straight line once we broke through those bases. Now, that's not always the case, but I mean, buying, large base breakouts has pretty much been the pattern to buy this bull market. And we're in the middle of that happening right now with small caps as a whole and many different small cap sectors. This is just, again, more positive reinforcement for the future on the outlook of small caps and certain small cap sectors and areas of the market. Now, again, if you enjoyed today's video, you enjoyed all the data and analysis, you're going to want to join the Investment Intelligence private trading group. That's the link to the Discord. Inside of the Discord, I'm posting, many different things. There's tons of resources in there. You get 20 plus swing trade ideas every single week, custom scripts and indicators that I use to help give me an edge in the market that I've developed after, 4 or 5 years of trading. We've got exclusive intel as well as exclusive chart layouts. It's a really great package. You're not going to want to miss out on that. Now you can sign up for the newsletter. That's completely free. Check out the website. You can review some of the previous articles that have been published and blogs. Take a look at, all of the newsletters that were published in July. Some of the recent ones. Take a look at how those charts played out after the charts were, the articles were published, and you'll see that many of them have worked out very, very well. And if you ever want to book a coaching session, or you feel like you need a one-on-one personal session, you can use my Ko-Fi page. There's a link in the description to that. You can sign up by clicking on the commissions tab, and in there you can book a 30-minute or a 1-hour coaching session directly through there. They also have this really cool buy a coffee button, basically as a way to leave a tip or donation for all the free valuable content I put out, such as the YouTube videos and the newsletter. Thanks again for watching, and I'll see you in the next one.